Do you own your home? Are you in a 30-year mortgage and wanting some tips and tricks on how you might be able to not only reduce the term of your loan repayment, but also to save some money in interest? Well, I've got some tips that I wanted to share with you on how you might be able to do that. There's quite a few different ones that I'm going to be going through, so you just have to figure out which one would fit the best in your routine and based on your financial situation. So here we have the very first option of saving you some money and getting your mortgage paid off more quickly. It is early payoff. So with this one, you make one extra loan payment every single year. So you can see we work through the math on you based on a specific situation. So again, this might not be your particular situation that you're in. This is for a 30-year loan, interest rate at 7%, loan amount of $475,000, and a monthly payment of $3,160. So with this one, if you make one extra payment per year, you can reduce the amount of interest that you pay over the life of the loan and also pay it off sooner than the 30 years. So you make that one additional payment of $3,160. You're going to be paid off 6 years ahead of schedule, and you see that you can net over $156,000 in interest savings by doing that. So a pretty impactful way of reducing the amount that you spend, saving you some interest, and also reducing that term. The second option we have, which this one I find very interesting, and you can see it's more impactful than the last one by a little bit, $156 versus $168,000, almost $169,000 in interest savings. But for this one, instead of paying the total amount of $3,160 every single month, you make biweekly payments. So you're still paying the exact same amount. You're still paying your monthly payment, except you're dividing it up into 2 different payments every month. So you're paying $1,580 every 2 weeks. With this one, you again, your net savings is almost $169,000, and you shorten your repayment period to 24 years. So essentially, it has the same term shortage as the other one, but you can see that it gives you more savings for your interest, and it's not really paying anything additional. You're still only paying your monthly payment every month. The third option is to round up your payment. So on this one, you increase the monthly payment to a round number. Again, you're saving interest over the life of the loan, and you're going to shorten the duration. So in this particular one, you'll see that it's only a 2-year reduction for your term, and you save about almost $32,000 in your interest. So still, if this is what works for you as far as your financial situation, it's still a pretty impactful situation and position to put yourself in. We also have 2 additional. So the $1 a month plan. This one is pretty interesting. Again, not something that I had necessarily thought of. But for this one, each month you increase the payment by $1. So if you have a payment of $900, that's what you pay, and that's what your payment is. So that's what you pay for the first month. The second month you go to $901, $902 for your third, so on and so forth. If you use this strategy, you could reduce the term of your mortgage by 8 years. And then lastly, you can use surprise money or bonuses to make extra payments. So if you get something unexpected, rather than getting a present for Christmas or something, somebody gives you some money, you could put that right towards your mortgage payment, put it towards the principal, and that will help reduce your payment, save you length of time and interest as well. So I hope that this was interesting and beneficial, and one of these strategies would work for you in your financial situation to be able to pay off your loan more quickly and save you some money and interest.